Ladies and gentlemen, thank you for being with me today as we dive into the fascinating world of prediction markets and focus on Polymarket. Polymarket is not just another crypto project, it is one of the most interesting intersections of technology, information, finance, and crowd wisdom. Founded in 2020 and operating on the Polygon blockchain, Polymarket allows users to place bets on the outcomes of real-world events, ranging from politics to crypto to pop culture. In essence, each contract on Polymarket is a binary yes or no wager on whether a specified event will happen. If it does, the yes shares pay out; if not, they expire worthless. One of the core ideas behind Polymarket is that markets aggregate dispersed information. When many participants bet with money, the price becomes a real-time probability estimate of the outcome. Polymarket's growth in recent months has been striking. For example, in October 2025, the platform generated about $3.02 billion in monthly trading volume, a powerful rebound from earlier in the year. At the same time, Polymarket launched roughly 38,300 new markets in that month, nearly triple the number from August, highlighting a surge in user activity and market creation. Polymarket also struck a major partnership with X, formerly Twitter, being named its official prediction market partner, merging social media reach with the prediction market engine. This collaboration signals the ambition. Polymarket intends to become a mainstream platform for forecasting and trading outcomes, not just niche crypto trading. Yet Polymarket is also operating in a competitive and regulatory-sensitive environment. Its U.S. operations were restricted after a 2022 settlement with the Commodity Futures Trading Commission, CFTC, for unregistered derivatives activities. Now, in 2025, Polymarket is preparing for a U.S. relaunch, and the regulatory environment appears to be softening, giving prediction markets a more favorable fight. This context gives your audience a narrative: a crypto-native startup, ambitious expansion, regulatory hurdles, and a surge in usage, all in one story. Let's consider the opportunities. Prediction markets like Polymarket offer several unique advantages: real-time probability discovery, liquidity, and the ability to trade on event outcomes rather than just assets. For traders and speculators, Polymarket presents a new dimension of exposure. You're not just buying a stock or token, you're betting on, will X happen by date Y? Which can attract different types of risk-taking. From an informational perspective, Polymarket allows markets to signal beliefs about future events. For example, users might bet on whether a country will shoot down a drone, or whether a regulation will pass, thus providing insight into market sentiment. Polymarket's revival and growth underscore that prediction markets are moving out of the fringe and into more mainstream interest. But with opportunity come risks, and there are several for Polymarket that your viewers should understand. First, regulatory risk remains significant. While progress has been made, prediction markets sit in a gray zone between gambling, derivatives, and financial markets. Any regulatory crackdown could hamper growth. Second, liquidity and market depth risk. If too many markets are launched too quickly, or if user growth stalls, individual markets may become thinly traded, reducing efficiency and attractiveness. Third, reputational and ethical risks. Some critics argue that prediction markets can become gambling by another name, or may enable manipulation in sensitive event markets. For example, there have been allegations of manipulation or abnormal bets in certain markets on Polymarket, raising questions about fairness and transparency. From your channel's perspective, this story is gold. It involves innovation, risk, regulation, behavioral finance, and trading psychology, everything a business and finance audience wants. Here's a framing you could use: Polymarket, the crypto prediction market gearing up for a mainstream comeback. Can it deliver, and should you care? It invites viewers into a debate. Are prediction markets the next frontier of investing, or another crowded speculative playground? Let's dig deeper into what is driving Polymarket's rebound. One driver is the renewed interest in alternative forms of trading and speculation, particularly in the Web3 space. Another is the integration with social platforms like X, which potentially expands the participant base and brings in more information flows, user liquidity, and viral momentum. Polymarket is also benefiting from the broader narrative of tokenization and decentralized finance, making markets for events as tradable as markets for stocks or commodities. For example, in the past the odds on a presidential election were given by polls. Now participants can buy a contract on Polymarket and have a skin in the game, potentially yielding a dollar payoff. That shift from passive information, polls, to active trading, event contracts, is profound, and Polymarket is at the center of it. On the flip side, Your viewers should understand that while high volumes are impressive, they may mask concentration. Many trades may be speculative, short-term, or driven by hype instead of fundamentals. Another point, the competitive landscape matters. Rival platforms like Kalshare are regulated in the US and reported even higher monthly volumes, $4.4 billion, in some measurements, placing pressure on Polymarket's position. Competition means Polymarket must not only scale users and markets, but also demonstrate uniqueness, legitimacy, and compliance. Let's talk strategy. For an investor or participant, using Polymarket effectively means understanding event risk, timing, liquidity, and staying alert to regulatory changes. It also means recognizing that prediction markets may amplify crowd sentiment, both positive and negative, and may move quickly when news breaks. From a content angle, you could walk your audience through a live example on Polymarket, show how a contract trades, how odds move, how information affects pricing. Explain that unlike a stock, where value is tied to earnings and assets, a prediction market contract's value is tied to the probability of an event, so news, social buzz, leaks, or sentiment can massively shift barometers. You should also educate viewers on risks. Event contracts may expire worthless, markets can be thin, and smart participants may dominate liquidity, leaving average users disadvantaged. In summary, Polymarket is a compelling story of innovation, growth, and risk. It may evolve into a mainstream market for forecasting outcomes, but its path is far from assured. Your key takeaways for the audience. Polymarket is ambitious and growing rapidly. Tens of billions in prediction volume, partnerships, relaunch plans. It represents a novel category of trading, event outcome contracts rather than traditional securities. But it suffers from regulatory, liquidity, competition, and ethical risks. High reward potential, high risk. For viewers, if you engage with Polymarket or similar platforms, you need to treat it as high risk, speculative, and fundamentally different from traditional investing. I encourage you to monitor developments. How Polymarket's US relaunch goes, how partnership with X evolves, whether regulatory clarity improves, how competition reacts. Also, watch for headline markets, big geopolitical or social events that drive spikes in activity, and how Polymarket contracts react in real time. From your channel's vantage point, you can build content that not only covers what Polymarket is, but what this means for the future of markets, information, and decision-making. Thank you for listening. I look forward to tracking with you how Polymarket evolves, whether it becomes a mainstream fixture in finance or remains an innovative but niche trading venue. And thank you for helping your audience navigate this new frontier of prediction markets with clarity, context, and caution.